Well, hello everyone. It is Shooter. It is the 16th, Thursday, I think, a little after 5 p.m. Wanted to go through a few things since I've been out for a little bit. Of course, at the end of our presentation, please do review our disclosure. Okay, going through primary waves, at all-time highs, what does that mean for investors? And then the next question that comes to mind there is, how long can this melt up? Continue. So obviously we're bullishly melting up. Okay. And, my narrative this week, excluding the 5% drawdown 2024, we appear poised to extend the streak. And we've had 5 consecutive months of positive gains. So now we don't have a rate cut. Let that sink in for a second. So we've had this FOMO rally without a rate cut, just on news of lower inflation. Okay. And then we had a little bit of a pullback today on the employment data because, it was up at 1.747 million. So as far as the applications. So with such a prolonged winning streak, these are exceedingly rare. Since 1950, we've had 30 of them. During these periods, dip buyers have continued to push it higher, even in low volume environments, like we saw this week, except for the 2 days we had those FOMO rallies. Now, with both the medium term and the 12-month gains being positive, historically, the next 12 months, typically the S&P is higher 93% of the time. I find that staggering. Whereas the maximum decline during a 12-month span was 9.8%. Now, we've only had a 5% decline at this point. So keep in mind, we could still have some extreme volatility, and this FOMO rally just continue after they decide to sell it for a few days or a week or whatever it might be. So the resilience we expect to continue. We see no reason for that to stop until the dot plot and the Fed minutes reflect no more cuts. So, we're going to progressively climb towards that, whether it be 6 months, 12 months, a year and a half down the road, so we could end up in this flat. And let me go into some other charts just to give you a visual. Now, I look back at the seasonality since 1950. So we have a positive period in May and June, right? And then July, we should have a, sort of a FOMO rally, I think, after, towards the end of the summer. And then in August and September, we should have a little bit of a drawdown. So that's where my concern is, where we maybe see a 7, 8% or a 9% drawdown, but then we continue the rally into the end of the year. Now, looking at the momentum, basically it breeds momentum. So once the FOMO starts, everybody has that fear of missing out and just continues. So looking ahead from what just has occurred today or this week, 1 month out, typically 76% of the time we're 1% or higher, right? 3 months out, we're 63% of the time we're 2.6% or higher. 6 months out, we're 6.2% or higher, 83% of the time. And 12 months out, typically we're 11% higher, 93% of the time. So we got a lot of upside here. All right, let's jump into the picks this week. VPL, we're in a bullish wave C that comes in around 88.11. So quite a little bit of upside, not quite 20%, but about 10% anyways. And looking at this, we're right at the 50% back to this with our lows. Our primary wave was down at 56, so we're well into the move. This is our A, this is our B, this is our C. So, ultimately, I think this continues as well. I think the Asian Pacific area is going to have one area, it's been a little lagging. And, based on this, it looks to me like we might get a breakout here soon and head towards at least that $80, I would say, in the next month to quarter, if we're looking at that time. Now, let's look at XEPRT, Now, trend support is way the heck down here. We've broken out of this flat that we were in, so we're now above that, 27. We'll push up to our 3 around 29, maybe get a back test a little below. I expect that to extend, though, a little bit, unless the market rolls over here. Then we could come back and test the 23.6, but realize our intermediate wave 3 is up around 32. Now, this being a dividend stock, it's not going to have as much FOMO as everything else. So just be conservative in what you're selling. Maybe 23 or 24. I'm not sure what strikes are there, but cash secured puts is probably the safest way to go with something like that. Or buy the common shares and pull a dividend and sell some cash secured put. So now XLRE we had in last week's or the week before last. We have fairly new primary wave set up with our target up around 49.74 for our primary wave 3. Now, unless this gets below 32, I think is what I noted on that. Let me get back to that. Yep, I'm wrong below 32 as far as the look. So outside of that, looks real bullish. Looks to me like we're going to get a little broadening and then a little bit of a push is the way it looks to me. All right, Pacer Industrial Real Estate. Again, I'm favoring the real estate because of interest rates. Looks to me like they bottomed, so I like that. It's a fairly new primary wave at 35.21. Our target wave 3, primary wave 3 is at 52.75. Of course, we're squeezing here, which is good. That usually indicates that we're going to break out. So looking at this, I'm wrong below 30, giving this one a little bit of room just because of where we are. We have a secondary primary wave, so we had a low, a higher low. I would expect that to continue on this leg up. All right, looking at ENPH, we have a breakout just overhead that targets 257 cents as far as the upside. So we're a little shallow on this. We've been in this flat for a little long. So once that breakout occurs, I expect it to pop. And note how it likes to pop. It gets into these little flats and then it pops. Notice that? Okay, historically, that's what it likes to do. So I think there's a good chance that we move pretty quickly, like a $20, $30, $50 move in a short period of time is very viable. Now let's take a look at Generac Holdings. Now this is a fairly new primary wave setup from 79.83. Even though we're at 143, our target is up around 203.75. 50% back is way the heck up there on this one at 342. All right, looking at HRTX. Now this is just slow grind higher. Our breakout's right about 5 on this. Our target wave 3, primary wave, I've got the wrong label on there. Primary wave 1 is at 17.20. I don't expect it to go there quickly, but 50% back's way up at 20.95 on this as well. So we get going, once we get above that breakout, it could gain some oomph. But again, the candles on this, I don't see that being as extreme to the upside as ENPH. I think it's just a slow, steady grind, unless we get some kind of really big news on it. All right, taking a look at Nvidia. Now, we highlighted this, quite a ways back at 882. We're now up at 940.86. I'm expecting a shallow C up here, around 1,061, because that's just where I'm viewing this as an ABC, okay? Inside this cycle wave 5 to the upside. So realistically, we could push up to 1,200. Now, a conservative person, if you don't have a position on, would sell something like 900 or 875 cash secured puts, or you could go out and do monthly, 2 months out, do 1,000, 1,050, or an 1,100 strike as far as calls. In other words, buy 2 months out, plan on rolling them through the first month and closing them before the monthly options roll over. So you have to sort of structure your trade that way, because we're about halfway through the month now as far as the monthly options are concerned. But I still like the view to the upside. The AI story is not going to go away. We still have the federal government to do a major acquisition or announce a contract regarding artificial intelligence. I think Microsoft is the prime candidate there, just because of the history of the contracts that they've won with the federal government, and the data centers that they have through their different services that they have, potentially could host that for the federal government with less of a capital outlay. But I expect the feds to get very aggressive in AI at some point here, and it should be on the horizon. But that's what we have for this week, folks. Great trading. Until next time.